Hey, what's up, traders? This is Alexander. So we having another stream here. So let me okay. So we are now looking to the dollar index, right? So what I am expecting here, what can happen? So we had a quite nice move. How the week actually started with a quite nice move after the previous week. Actually took out the previous week's low, then it will created this lows and started move higher on Friday. So the Monday, Tuesday was the continuation of this move. What I think could happen in here, what I will be looking for. Of course, for the intraday trades, I'm still tracking my external liquidities on the previous day's lows for the short-term setups and the previous day's highs. But what I'm seeing here, and I believe it's a kind of a trap, we can see that basically yesterday we have end up on this high, which is equal with this previous high, right? So we have this beautiful so-called resistance, but it is resistance in the terms that people will who will trades, they will most likely put stop losses above it, right? So it's a liquidity zone basically. I think um, market would like to visit this level as well. And actually we have the same phenomena here on the bottom, two equal lows, right? So I believe that the market will be clearing this level. So I do not like to speculate from the internal liquidity, like I mean for the long term, like from here we could go most likely here, but I do not like to speculate this because the gap in here is too big. So right, so the market can drop much higher before it goes up, or it can go even first down and then do this, right? So what I will be doing here, I will be patiently sitting on my hands and I will be waiting if the short-term setup will form in here. Then I would be interested for short-term long in here. And then we had this break of the structure after the previous week's high taken out and the previous day's highs. So if the price basically retrace back to this gap, we should be taking short as per my strategy, as per my setup. But as said, I don't like how they left this trap in here. So basically, I cannot. I think I will skip this trade because if I do that, I will basically enter the short in here and I will put stop loss above here, and I believe there will be a lot of crowd, right? So this would be nice trade, but I would be interested only after the price taking out these highs, and then I will be looking for this short, right? So that's what I would be interested in here. So basically, in the opposite, on the opposite side, similar thing is on the euro, right? So we are seeing that the price basically has dropped, and today is a Wednesday, so we had a Monday drop. They went simply for this liquidity zone, right? These equal lows, which was here. So market simply opened and it went down straight, right? So now we having same as on the dollar index, they leaving this, right? So as per my strategy, I got break of the structure, quite sharp, and now I should be looking for the pullback to the, this is a 1 hour gap, right? And I should be taking a long trade in here with the stop loss below this low and targeting 1 to 3 risk reward. This would be perfect, but as said, I think this is a trap. So um, if I would like to see this taken out first and then break on the smaller time frames and then this continuation, right? That's only way how I will be interested into step into this long. Then of course I'm still interested to for the short term uh, external liquidity trades, right? So yeah, so that's for the euro. pound is very similar. So pound, we have this break. Sorry. So we have this break in here after taking out previous week's low. We've been taking out as well the previous day's high. So this rejection is pretty sharp, and then price moved higher, right? So we could see a pullback, and then we could be looking for this. But again, look at this. This is like relative equal lows. I believe the liquidity in here could be visited. So somehow I'm not interested in this moment. Then we have this buy side liquidity. So here, same as the previous day's highs, I could be looking for the short term short side as per my strategy, which I'm explaining in my community, or it's as well below every post here. So here is the USD cat, and what we can see here, again, the price went up, but where? Look, again, buy side liquidity here, right? The buy stops has been activated in here, so the traders basically enter at longs in here. Then the price is going to hunt them, right? So we had the break of the structure after taking out this liquidity. Then we had the pullback in here, and then price dropped down, right? So taking this short, trying to take a short right now, again, I think it would be kind of late, trying to join the party late. I think the trade already happened. Now here is the USD JPY, and we had actually last week the drop below the previous month's low, and it was as well below the previous week's low. And since then, we had this break of the structure. Then the price retraces just a bit, created two equal lows. So engineered liquidity is created in here. And then we are moving higher, right? So what we got here, of course, looking for the trades on the previous day's highs, previous day's lows. And then, of course, this liquidity would be nice as well. So I'm watching this liquidity as well. And even if we go to previous week's highs, lows here on the top, then I would be looking for the short. And here I'm tracking a potential entry for the bigger short, because what I like in here is that this is actually the reaction on the monthly time frame. Then we had this break, then we had this retest in here. So now I'm thinking that the price could come higher, most likely into this accumulation. So we had this accumulation, and in here there would be some levels where I would like to be entering. So currently I think that we will see a pullback still above this previous week's high, and then we could start to look for the bigger swing trades, right? I am not doing the swing trading much recently, because I switched to the intraday and the short-term trading. But I think we will see bigger drop based on the COT data, which are quite becoming bullish for the JPY, right? So waiting, and as well in the recessions, mostly the JPY is the one which quite strengthen. Now I want to show you something as well, which was yesterday here, the opportunity. And actually we can reanalyze what I did in yesterday's stream, right? So let me delete this break of structure. So what I was looking for actually yesterday, and we will analyze my mistake, right? So yesterday we basically had this previous day low here, and it was not at that moment, it was not taken out. And I was expecting the price, because I already thought that if they took out the previous day's low, and I wasn't patient enough. So I was thinking that we will see the price to because what I have seen in here, I have seen this break of the structure in here, and then I was so let me mark it up. Where is it? Boss. So, and then I was thinking that we will just drop down into this liquidity, into this into this gap which was here on the bottom, and I had the stop loss in here, right? So we've been filled, we get fill, and it was looking very good in the first moment because we had like a one-to-one profit. We took some partial profit, but we didn't move the stop loss. I was expecting the price to go higher, right? Because as well we had this relative equal high, so I was expecting it to take it out. But what they did, I mean the market makers, they basically manipulate the price down below this previous day's low, right? So here is the lesson, that we are basically should be more patient and wait always to the external liquidity to be taken out, right? So I was taken out, and then look what happened. How nice, how nice was all this what I'm trying to do formed, right? So we had break of the previous day's low, then we had it followed by the sharp rejection, then we had the break of the structure in here, we have the break of the structure, and then as per my strategy, as I explain it, is that we need pullback 50%, and we are looking for the entry on the gaps, right? So we won't see the gaps, or we could be watching as well the order blocks, but we want to see a entry on the gap, so it would be on this one, right? So then we had the liquidity taken out, we have the break of the structure, then we plot the Fibo 50%, below 50% we're looking for the entry on the gap, and we put stop loss below this swing low. Why below this swing low? Because as the liquidity was taken out, we are now have a big chance that we would be safe, right? So we can be entering on the top of the gap, or even on the bottom, right? So even if we enter on the top of the gap with the stop loss in here, because sometimes the price it touch just the top and it goes up, right? So having a pending order on the bottom, you don't have to be filled. Sometimes it goes there, sometimes not, right? But if you entering below the 50%, you already getting quite good risk reward, right? That's on the what we have to consider, what we should do if we doing if we trying to get the best entry, right? So then the gap was filled, and we want to reward 1 to 3 risk reward. So here we could be out, right? Or we could take some partial profit and then leave the rest like this, right? Or whatever. But anyway, I don't want to be saying, right, you buy here and you close here. You never close the top, right? It's always better to get out with your risk reward. Let's say this 3 minimum is what you should be targeting, and that's fine. Same thing actually happened on the euro, right? Uh, I was looking for a similar thing in here because I thought that the liquidity was taken out here, and I was looking for the entry in here. Then they manipulated below the previous day's low, and let's check how the trade should be, right? Of course, now you might think that I'm just explaining how it should be, but I didn't have it. Well, yes, I in that moment had a little bit different view. But important when you're trying to learn something or understand the strategy, you should always look back, review your day, and look how it should looks like, right? And write the notes about your mistakes and what you can do next time correctly. So if we look at this moment, so we can see we have the previous day's low being taken out. Then we are looking for the break of the structure, right? So we are, what I'm always doing is that I have this my line, and then after the break, I'm looking like, okay, now I need a break of the structure here. Did it happen? No. We have a new low. So where I need a break of the structure now? Here, where it was created from this latest high. It's here actually, right? Then did it break? No. Then we have new low here. Okay, cool. So it's already in the New York session. So what I'm looking for then? Then I'm looking for the break of the structure of this one, right? It happened. And as well, it happened in the way that actually this break has break with the full body. I mean that we have it broken up. Just look at this. Let me highlight it for you. Basically, you have a break with the body, right? In compare with the pound, we had the break, but with the wick. That can be tricky sometimes, right? This can be tricky because this would happen on the euro. It's a stronger confirmation. So then you have this break. We need to go a lower time frame. Then we got this break, and then we following where the price start to retrace, right? So retracement actually started in here, right? Here is the top, and then we got the retrace. It was fast, right? And then we should be looking for the entry on the gap, right, below the 50, which is we need to go 1 minute. This is what is always recommended to follow on the 1 minute, right? So then we have the gaps. So first gap below the 50 could be this one, right? Is there, right? And then we're looking for the entry. So here is the gap entry, right? Swing. And we want 1, 2, 3. This is what we want to take from the market, right? Of course, we could have much more, but we will always leave something on the table. That's part of the game, because what can as well happen sometimes, look what is the advantage of taking just the 1, 2, 3, because what can happen, price can come just up here and then going down, right? If we doing this intraday trading, we are not trying to speculate on the very very big move, right? Okay, so oh look, okay, I had the same experience. I later saw my mistake, and now I'm waiting for the pullback. Yes, yes, yes. Now as well, I want to show you. Actually, the same thing happened on the USD CAT. So let me show you, because it's sometimes we are. I know that our biggest mistake is not being a patient, right? Because sometimes it takes time the until the setup forms. So we had this USD CAT. It went up above this liquidity, right? So in this movement, when we have this break, we know that market participants are entering longs, and then the price could probably go after taking their stop losses, right? So then we're looking the price action, and we actually can see that we have this break of the structure in here. So in this moment, we know that um, that the market makers will most likely do that. Then we are looking for the pullback, right? So we have the break of the structure, and then we have to plot the Fibos. So in the premium, so in the higher part of the 50% pullback, we will be looking for the entry on the gaps. We can go even lower time frame. We can go to the lower time frame, right? And where we have the first gap on this lower time frame above this 50%. So here is nothing, here is one, right? So here is this gap on this 5 minutes here. Here is actually another one on the top, but this is what we have to consider where we want to enter, right? Because look, we could be entering here, or we could be entering here. Of course, right now, when I know the future, I could tell you, you could enter here, it would be better, blah, 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 blah. But in that moment, you could see that on the previous case on the euro, if we don't enter the first gap above, in this case, above the 50%, we might would not be on the euro, we would not be filled, right? Because if we come back to the euro, let me just bring it back. If we are looking for the entering the, let's say, second gap, or even on this second gap, we would be filled here. Actually, if we entering this second gap, we would be, and we would be filled, we would be filled actually perfectly, right, in this moment. But this is the case which we've been talking on the GBP. If we are expecting the gap be filled fully, then we will might miss a trade in here, right? So anyway, first gap below the 50% correction. So now, if we are looking for this on the USD CAD, so we had this buy side liquidity taken out, followed by break of the structure, right? Then we are looking for the pullback above the 50%, and we are looking for the entry on the gap, and we put stop loss above our swing high, right? So where we are entering here, and we put stop loss above the swing high, right? So actually we could be filled already in here, but only in the moment if we put the sell limit here in the during the night, because this was during the Asian session, right? This is where we not trade, so we would be entering probably here with the stop loss just slight above. Never try to do something like I want to be safe, blah 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 blah. If the price breaks up, it will most likely make enough move to take you out. So you want as well good risk reward ratio. So you put stop loss like this, and then you look for 1 2 3 risk reward, right? So you have 1 2 3 is even just here, right? So this could be trade on the USD CAD, right? When later we have more experiences, we could be of course doing this, but I am I have experience. Even I have more experiences. I'm currently actually happy to take my money out and forget about this, because that's the later part of the day. I go home. I'm with my daughter. I don't need to look to the phone and the stuff. So this is you know and here is the thing, this is the patience, right? So basically we have the liquidity taken out, then we follow the break of the structure, and then we have to know that in here possibly we could be looking for that as well. It's important to look for the dollar index um, confluences, because yesterday what I actually did, why we might be stopped out on this euro. Look, I will show you. We've been looking for the entry in here in this moment on the long, but price still dropped lower, because why that happened? Now look at this. We had the information that the previous week's low was taken out, and we've been expecting the price to go higher, right? But let's check the dollar index. Where was the dollar index in that moment? The dollar index was uh, was here, still did not take out the previous week's high. So, and if it is so close to it, we can expect that the price will go there, right? So later when I was looking to the euro, I actually realized I should be waiting for the dollar index to make its own move, right? And the US, and same was on the pound, right? So the pound actually already hit the previous week's low, but this move was actually caused by the dollar index finishing its move to the week's high, right? So that's why was this mistake. And the USD CAD actually, uh, look how it's all connected, right? So USD CAD has made this, and it was in this correction, and it was doing this correction, and this move was actually just a correction here. This was the dollar index moved to the previous week's high, right? And then we have the latest one is the USD JPY. It's kind of tricky now, right? It's a consolidating. It has moved higher on the Monday, Tuesday, but in this moment I would not be looking for anything only on the top on these highs. And as well, just if you want to look back here, so here was actually the perfect opportunity as well, just to for the education purposes. So why I'm doing this is, of course, because if I repeat that for, if I am uh if we have mm, okay, so what was here? We had this previous day's low taken out. Then we had this yeah, it was on the lower time frame actually. It was even on the 3 minutes, I think. So the setup still repeats, still repeats. No, even on the 1 minute, I think. Let me show you. So this is actually still only one thing we need to be looking for, because it still repeats and it's so easy, right? So we have on this 1 minute, we have the previous day's low taken out, right? Here we have break of the structure. We have the latest high of that swing that took out, that created the lowest low and took out this previous day low, right? So low swing, we have the break of the structure, then we're looking for the 50% correction, which is here, and we want to be entering on the gap. So if there is not gap, we are looking for the order block, which would be this candle, right? So here should be a entry with the stop loss just below it, right? Looking for this, and you got it. Then later you come to the charts and you see that you basically could have this. Hey, you will be pissed off. All right, my friends. So this is it. This is it for today. And I wish you happy trading, my friends. Join my community. We are all trying to trade this, and we discuss this strategies. So I wish you have a great day. Hello, Issy. Hello, Lobo. Wish you a great day. How do you find exactly where the order blocks are? Well, the order block, it's a let's say, a little bit more complicated, but just to make it, because if I have to explain, I actually came from the supply demand trading into this ICT things. So what I am actually, how I am actually understanding the order block, it's kind of a bit as a supply and demand theory, right? So if we have in this candle, last down candle or last couple consecutive candles moving down, what the market makers are probably doing, they probably buying in here, right? So what if the price is dropping down, they entering longs. Then we had this sharp move and the break of the structure, so we can see that here is the gaps, these displacements, that could give us a clue that the market makers has been trading here. And the latest in this latest candle before this sharp move should be a considered as a order block, right? So that is here. So you look just to the ICT videos, because he is explaining a lot of things there. And I do not want to be saying I'm creator of this. It's not, I'm of course not. I'm just, I just took the elements of this ICT strategy, mixed it a little bit with my supply demands view, and that's what I'm using. I used to be using supply demands in the past. Currently, I added these liquidity things, and it all makes more sense for me now. So okay, so we have some alarms. So what's going on? All right. Okay. Okay, so this is it, my friends. I wish you have a great day, and bye bye.